Welcome, dear traders. You're watching a recap of the Asian session. After negotiations on Monday, cautious sentiment prevailed in the Asian trading. As the world's largest economy is 10 days away from a possible default, investors are unwilling to take any risk. Market concerns over the debt ceiling have intensified significantly. Janet Yellen added fuel to the fire by warning again that the government would run out of money by June 1. Yesterday's two-hour meeting between Joe Biden and Kevin McCarthy didn't bring any positive results. Biden said that Republicans must move off their extreme positions. Republicans want to cut federal spending by 8% for 2024. They are also opposed to increasing taxes for wealthy Americans. Democrats are ready to make some concessions when it comes to spending cuts. However, they do not agree to take such drastic steps before the presidential election. While lawmakers unable to strike a deal, problems with the debt ceiling have reached a critical point. The risks of the first ever default are mounting every day. The Fed's mixed remarks on the monetary policy also affected market sentiment. Although the economy is quite resilient to rate hikes, the recent banking crisis has revealed that there are certain risks. Fresh remarks made by Fed policymakers puzzled investors. For example, Minneapolis Fed President Neil Kashkari spoke in favor of a pause in June. He cautioned that while it may appear like the worst of the banking sector's stressed over, history showed more trouble can be out. St. Louis Fed President James Bullard believes that given the strong labor market, the key rate should be raised by 50 basis points this year. And the US dollar resumed growth amid expectations of another rate hike in June. It also climbed amid cautious optimism expressed by Joe Biden and Kevin McCarthy after yesterday's meeting. The US dollar is trading just below the 2-month high reached last Friday. Another bullish factor was an increase in a 10-year Treasury notes. Yesterday, they looked the longest winning streak since April 2022. Concerns over default limited the upward potential of a greenback in the narrow range of 103.10 and 103.40. In the Asian session, the US dollar index consolidated at 103.30 versus its main rivals. After a strong recovery on Monday, the US dollar was hesitant to pick up a trajectory. It's still trading above the key level of 103. The next target level is the monthly high of 103.60. It also acts as a resistance. The support level is seen at 102.50, and the further trajectory of the US dollar will mainly depend on incoming data this week. The yen was unable to take advantage of a strong domestic macro stats. The manufacturing PMI index in Japan surged to an 8-month high. In May, the indicator reached 50.8%, returning the expansion for the first time since June last year. Moreover, it grew at the fastest pace in 13 months. At the same time, the composite PMI index rose at the fastest pace since October 2013. In May, it came out at 54.9%. Business activity grew in both the services and manufacturing sectors. The manufacturing sector climbed for the first time since the end of 2022. Despite positive macro stats, the yen largely reacts to external factors. For example, on Tuesday morning, it weakened amid rising yields on US Treasury bonds. Concerns over the default may support the Japanese currency versus the US dollar. In the Asian session, the yen managed to gain momentum amid favorable fundamental conditions. The dollar-yen pair reached 138.50. However, decline in the price corridor of 138.30 and 138.90 is likely to be limited. The US will unveil data on the PMI indexes later today. If they turn out to be strong, it might push government bond yields even higher. It will definitely have a negative impact on the yen as well. In a contrast, the growing threat of a default spurs demand for the safe haven yen, and the standoff on the debt ceiling could help the yen rise higher. So, the Australian dollar remained a downward movement in the morning after a sluggish start of the week. The Aussie was moving in the bearish channel of a 0.6621 and 0.6664. It sank because of several factors. First and foremost, its trajectory was affected by risk aversion and the rising US dollar. Oil prices fell. Tensions between the West and China are also growing. Given Australia's dependence on the Chinese market, such a situation is extremely unfavorable. As a result, it was unable to rebound. Expectations of another rate hike by the Fed and the Reserve Bank of Australia's dovish decision also pushed the Australian currency down. The AUD-USD pair fell to 0.6633 at the end of the Asian session on Tuesday. The Aussie is likely to slide to the monthly support level of 0.6610. After several days of moderate growth, the New Zealand dollar tumbled to 0.6626. At the end of the Asian session, it was trading in a narrow range of 0.6253 and 0.6304. Since last week, investors have been assessing the prospects of a rate hike by the Reserve Bank of New Zealand, and the regulator is likely to raise the interest rate for the 12th time in a row at its meeting tomorrow. However, traders priced in the likelihood of a rate hike a long time ago. Therefore, the trajectory of the Kiwi will largely depend on the US dollar's movements. And that's all for now. Leave your comments down below and don't miss our next video review. Subscribe to our channel and follow news with us. And see you soon.